So on the go trade on Monday, when I came in during the Asian session to do my morning analysis, I saw that this bearish candle actually closed above the weekly 50% level. So the ideal trade entry would have been on the next candle, when this bullish candle actually respected, created higher lows and flipped bullish. So targets would have been this area, and we can see that price tapped into it just nice before coming down again. Because overall on the higher time frame, we are actually in a range over on these two areas here. So we're just doing some range trading, so I wouldn't aim for very big targets. So overall this trade would have netted me, but if I entered on the flip, stop loss below that wick low, aiming for the 1 hour zone above, this would have given me about 3R on the trade. So on this trade on the 29th of June, I saw when I came to the charts, price was creating lower highs but still respecting this weekly 50%. So for me, since this was my buy area, I was looking for price to respect this area, which is what it did on the 4-hour closing above. I was waiting for it to actually bounce off. So when I saw this candle closing above it, I then dropped down a bit too low onto the 1 minute, and I got faked out on this trade before it actually continued moving up. So the mistake that I made was going too low on the time frames in this case and failing to notice these equal lows over here, which is why price actually went down to grab liquidity from this area before actually pushing up. So my entry was actually at this 1 minute area. So I saw that there was a break of structure here on the 1 minute, so I put up this demand zone over at this area here, and I saw that when price actually came into the zone, it didn't close below but rejected the bottom of the zone. So I took my long entry when this next candle formed a higher low, and then I took it like this with my stop loss below these lows over here, aiming for this area of TP at this 1 minute supply zone that broke structure as well. So we see that the entry actually would have hit TP if I had avoided this fake out here where I took the loss. So this one I think I could have avoided by not going to the lower time frame like the 1 minute, because a lot of fake outs do happen in these areas, and I needed to be more aware of equal lows forming on the left, as price always tends to do some kind of fake out to grab liquidity before pushing after that. On the 30th of June, which was Wednesday, so when I came to the charts, I saw previously overnight price kept respecting this 1 hour zone here, and then it was forming low highs of it, but it's just that because I was sleeping, there wasn't any entries there. But when I came to the charts the next day, I saw that price was slowly losing bullish momentum as it came towards the 1 hour zone again. So I waited for on the 15 minute to see if price will respect this zone, and when it flipped bearish on this candle, I took the entry short with my stop loss just above this area here. So management of the trade wise, once price closed strongly below this, I would look to reduce my risk. So as you can see, when price did this candle over here, I reduced my risk above this new 15-minute supply zone that formed. So I didn't really want to squeeze my trade, because overall I was aiming for my TPs to be around this area here at 1748.45, because this area was the 4 hour plus daily zone confluence area. So my stop loss was placed over at these highs over here. If I were to zoom in for you, I reduced my risk by about half, and then after that we see that price started to chop for a bit before going down lower. So when this next strong close happened below this 15-minute area, I locked my stop loss above this area here. So when this strong close happened below these 15-minute areas, I reduced my risk again now to this new 15-minute supply zone. So I put my stop loss in profit above this area, and then I was waiting for price to come and tap here. However, price decided to turn around after that, and then it got me on this candle here. Overall, this trade I netted about 0.81. So how I think I could have managed this trade better was, since price was breaking strong below the 15-minute structure, I could have secured some, especially when it broke the second time. since at this point in time I was already awake during the London session. I could have secured half since there were also rejection wicks to the 4-hour zone over on the left. So in this case, maybe if I had secured here after this bullish engulfing candle from these rejected lows, which is also a 15-minute demand zone, which I can draw up for you here. So since price actually went in, didn't close below the zone, respected it, and closed with a bullish engulfing, I think I could have closed out or at least secured some profits on this candle here. So that instead of netting only 0.81 on the trade, I could have actually gotten about 5R on the trade. So this could have been better managed. On the 1st of July, which is Thursday, I saw that price actually already broke on the 4-hour. So I was looking for price to come back and retest this 4-hour supply zone over here. So when I came to the charts, I saw that price was trying to reject the 4-hour zone but didn't tap into it. This next candle got me a bit interested, but again, because it missed the 50%, I decided to wait, because I've seen that usually when price doesn't touch the 50% level, it tends to chop for a bit first, and I didn't really want to go through that. So I was a bit more patient with the trade. I dropped down to the 1 hour to look out for signs. So even though this was forming lower highs, I still waited for price to come back and tap, as you can see from my entry here. So nearer towards the New York session, we see that price failed to break below these lows, which further convinced me that it was the right decision to wait, because if price was already creating lower highs, it shows that this sell zone is valid. It's just that there isn't enough momentum for price to push off because it didn't tap the right area. So after that, we can see price then went towards the 50% level, and then this was another sign for me to start taking note of the trade. And when price actually formed and finally closed below this 4-hour 50% level, I was really interested in the trade, and then I dropped down to the 15-minute. Noticed that there was actually lower highs forming at that point in time already. So when I saw that price was rejecting multiple times to the 50% level and still closing around that area, when this next candle actually flipped bearish, I took the entry short with my stop loss above the 4-hour zone. The first area where I would be managing my trade was when price broke and closed strong below this 15-minute lows. So as we can see, after that, price tapped into it, ranged for a bit, and then finally when it broke through, I reduced my stop loss to somewhere above this 15-minute zone here. So this was where I was managing the trade. I was looking to TP at this 1-hour zone, but however, we see that price started to grind, and then overnight it hit my stop loss in profits. So this trade netted me about, let's see, 1R on the trade. So this is the trade on Friday. So I only took one trade, gold shorts on Friday, because it was NFP. So the idea came about when this candle actually closed below my 50% level, which is marked out by the green line. So I then waited on the 15-minute, and I saw the next candle actually still closing below the 50%, but however, because it broke the high, I waited for another candle to form. And when this candle closed bearish, I knew that as long as the next candle made a lower high, I would make my entry then. So that's exactly what it did. So when it flipped bearish, I put my stop loss above the 1-hour zone in case the NFP results come out, and then I didn't want to get slipped before my trade actually went on its way. So slippage is a common phenomenon when trading during high impact news. So those of you that have reached out to me asking why your entry prices are very different during the news events, just understand that it's slippage. If you want to read more about it, just Google slippage Forex. It's really that simple, and then it will explain to you what exactly it means. My advice, just don't take limit orders during high impact news events, just to be safe. So you can either wait for news to clear, then take your entries, or just enter way before that, so that at least your entry price is as close to what you want as possible. So in this case, when price was setting up before pre-NFP, it was consolidating for a bit, but we can see that it was still closing below the 50%, so I held on to my trade. So there was this demand zone that I was concerned about. As long as price managed to close below it, I would actually move my trade to BE or manage my risk accordingly after the news event came out, then unfortunately I forgot to notice this demand zone over here as well. And because the NFP news actually came out quite mixed, one was positive, one was negative, we see price pushing down first and then flying to the upside after that. To be honest, this entry could have been caught only through some kind of pending orders because it was a new spike. Unless you were waiting with a pending order here, if not, you definitely would have missed the trade. So I don't use pending orders during high event news because I don't want to get slipped. But in this case, this trade hit the stop loss at the end, as you can see from this candle over here. So I accepted the risk, trading before NFP. I had all the signs for my trade. No one knows the results of the NFP, but I trusted my analysis and executed based on my checklist. So I sized down because this is a high impact news event. No one knows the results, so took a 0.25% loss on this trade. Moving on to GJ, so this was the trade on Monday itself. When I came into the charts at London Open, I saw that price actually rejected off the 4-hour zone with this bearish candle. I didn't enter at this point in time because I was I think I was a bit late to the charts. So in this case, I waited a bit more for price to develop, and then I got another entry when this next bearish candle signaled to me that price was already forming lower highs. So if we then drop down to the lower time frame on the 15-minute, we can also see that price broke this structure and was also forming lower highs on the 15-minute from that 4-hour demand zone. So I took the entry on the hourly when the next candle actually created a lower high, and then that was my entry for the day itself with my stop loss above this rejection wicks on the hourly. After that, I was looking to manage my trade once price actually closed strong below all these wicks on the left. So when it did that, I was managing it on the 15-minute over at this area here. So once price actually closed strong with this candle breaking the 15-minute lows, I reduced my stop loss above this wick here. Over above here, reducing my risk by a little, and then I was aiming TP1 to be at this 4-hour zone here, which was also in line with the lows, as I knew that sometimes at equal lows, price might go and make a liquidity grab before actually pushing up towards the previous sell zone and then coming down again. So at this point in time, I secured half and reduced my risk, and then the trade continued to develop, pushing lower, and I was aiming again for 152.900. So price stopped a bit at this 50% level, and then I was looking at the 15-minute, and I decided that I would reduce my risk above this stop loss above this wick area over here, as price had already closed strong below all these lows. So when price stopped a bit at this 4-hour 50%, I left my trade as it was, since I already reduced my risk and also locked it in profit. I was looking to aim towards the next 4-hour zone below, which was here at this area here. So I didn't have this 1-hour zone drawn up on my charts. If not, then I would have aimed to take some profits off at that point in time, because I thought that the real highs were here and price didn't even break it. So I didn't give too much thought into this demand zone on the hourly on the left, and I was aiming for the 4-hour zone at 152.400 as my TP. However, we can see that price after that continued to push into that 1-hour demand zone, and that's when it bounced off twice the next day. So when I woke up the next day, my stop loss before I went to sleep, I locked it above these highs over here. After I saw the hourly structure being broken strong, I put it above this area, further reducing it into profits. But because I didn't have this zone drawn up and I didn't see this rejection over here, if not I would have closed off the trade at this point in time. Price then gave me another chance to close it off, but because I didn't have the zone drawn up, I missed it, and then I got hit. My stop loss got hit after that over on these candles here. So I could have netted about, let's see, if I had aimed for the 50% level, it would have been about 12R, but because I I missed out this zone, then I ended up with about 7R on this trade. The lesson learned for me on this trade was that even if there are minor highs on the 1 hour structure, as long as it's broken, because it is an hourly chart after all, I do need to pay attention to zones on this time frame, as the higher time frame zones tend to hold better than lower time frame zones. So on this trade here, short on the 29th of June, I was quite disappointed to have missed this, even though I was already short bias, since we can see that price is already creating lower highs on the 4 hour, and this thing overall is bearish after all, since overall the higher time frame structure is also creating lower highs. So I should have trusted that bias, but instead I got a bit caught up in the fact that when I came to the charts, this 4 hour candle failed to close below these lows, so I thought that price had already been done with its pullback and might potentially pull up from here. However, if I look at the 1 hour, it had already done a strong break of this structure here below these lows, and then now it was forming another strong break of structure here. So the ideal situation would have been to just wait for the retest, lower highs, and then take the entry short down to this 1 hour zone. Yeah, it was a textbook trade which I missed. So the entry, as you can see, near pre-London, we see a perfect tap to the 50% of the 1 hour zone, and then the next one created the lower high. Technically the entry could have already been here when the candle flipped bearish and have the stop loss above that rejection wick, and then just hit down towards this previous 1 hour zone on the left here. So this was a very easy trade to take. However, because I missed this, I was still short biased, and this trade actually confirmed my short bias. I actually tried to catch the trade a bit later on. So over at this area here, if I were to show you, so I took the entry somewhere from this bottom of the area, because at that point in time, again, I didn't have this zone drawn up, so I was aiming for the 4 hour zone below over at this area here for my TP. As you can see, at this area I was aiming for the 50% level. So in this case it was quite a bad miss, because we see after that price actually bounced off at the zone and then hit my stop loss after that. Missed the first entry, should have just let it go and been more aware about the 1 hour demand zones in the way. So on this trade, again, I'm still short biased because of all the lower highs that were being created. So when I saw that price actually did a rejection to the 50% level and created lower highs, during my trading hour, which was nearer towards the London session, I took this 4 hour candle when it flipped bearish. So my entry was somewhere around here with my stop loss just above that wick high, and I was aiming for this 1 hour demand zone here, as price had already broken above these highs. So as price came down and I saw that it didn't really close strong below this level, I drew up this 15-minute zone here to see if it would be respected, and I just placed my stop loss slightly into profit above this level. So it was respected, and then we see price actually creating some more lower highs, and then that's when I held the trade longer to come down even further towards my TP at 153.100. So when I saw this next candle closing strong below this 1 hour lows, I then shifted my stop loss here, and then finally on the 15-minute I reduced it again further down to this area after the 1 hour closed strong below. Overall, you can see how the trade played out. It hit TP and then the trade was closed over here, netting me about 4R on this. So for this week, NFP weeks has usually been my poorest performing week, so I didn't really hit my trades with full risk unless they were A setups for me. That was how I actually managed to maintain profitable for this week, even though I think I took more losses than I did the previous few weeks. So again, keep your losses small, and then leave your winners to run. Just manage your stop loss accordingly. When you see a strong break of structure with a strong close below, that's when you start to manage your risk without squeezing your stop loss. So hopefully this recap has been useful. If you guys have any questions, again, just drop me a DM on IG. If not, then drop it in the comments below.